YouTube, what's going on? You guys already know the vibes. It's your boy Pip, and today we're back with another video. If you see with the thumbnail and the title today, we'll be doing 5 things the market does not want you to know. I'll show you guys on the charts so you guys can start creating and building your own form of edge in the market to start seeing consistent plays. With that being said, let's get it. Let's go. All right, bet. So let's lock in. The 5 things that the market does not want you to know to build and form your own edge in the market. And we're going to use a fresh chart. So let me grab something that I haven't used in a while. We can use USD CAD. And let's get to it. All right. So the 5 things, actually, let's get back. First one I want to talk about is identifying a trend and understanding the probability. And what I mean by that is the market doesn't even want you to understand that. When price is in a trend, is always going to respect that trend. It's up to time and patience, and it's up to you to capitalize when that happens. That's why fundamental trading, it sounds good because it is the pure data, but that's why technical analysis and waiting for volume and key levels, that's where that butter comes in, where you have to wait for that entry, wait for all that trend to come back and start continuing. And I can start showing you on USD CAD right now since it is fairly empty. So let's take consideration that, all right, if we was to go on the daily time frame and let's remove these drawings, we can clearly tell ourselves one clear thing, that price is technically bullish, but at the time being right now, we are clearly consolidating. So it's up to us to find structure within the consolidation, simply because this is a higher time frame consolidation, which is really good for us because we can really capitalize off a big move that could happen off of this. Just drawing the zones really quick, a little bit messy, just so I could just give you guys clear indication. All right, boom. This is a key level. That is a key level. So from here on out, I'm going to take consideration of what's going on right now, and I'm going to tell myself what happened at the start. So what happened at the start, you can clearly see that price was bullish, came back above, and when price came all the way up to this high, price came to this high, started to sell off, looking for more buyers and looking for a support level. And then when price came to continue, it actually failed to continue to break and continue that bullish momentum. From there, you can see that price came to make this low, not breaking this low, but that lower high was good indication that buyers were getting weak in this zone. And then once price would start to break off on the support level, boom, you can see price came back into the support level right here again. Now, take consideration that this is me just taking consideration of the flow of what happened from this zone to that zone. I know that if price is failing to break above, I'm going to see supports being broken. I'm going to see lower highs, and I can capitalize off that on the way down. If I see price being bullish, I clearly just want to see price stay above this zone, make higher lows, make levels of resistance being broken, and continue on up. And that's really it. That's what I wanted to focus on the start. And now, if I focus on what happened now, I could tell myself that, boom, price was bullish, failed to continue once again, made that lower high, but failing to break. Once I seen price break, I could have capitalized here, had a stop loss at that lower high, and I could have held all the way down here, simply because of that information that I learned from that first time price did that. That's why I say consolidation on higher time frames, that it is really sweet once you understand trend and the probabilities, because that's why I say the markets don't want you to know that at all. So that being said, that is one example with the markets, what they be trying to hide. Let me show you number 2. One thing they don't want you to really understand is how to use your support and resistance. And what do I mean by use your support and resistance? Because a lot of people say, all right, I use support and resistance to buy, and I use resistance to sell. And yes, that is good at times, but I really want to show you a sauce that how you should be looking at support and resistance, because this is one thing that really helped me understand what is going on in the market. So we don't even need to use the charts, because I can literally make an example, and then once I show you in the charts, you're going to be so shocked of how clear it is. So now let's get back to the charts. Boom. Now we'll go clear. Let's just take consideration that we're going to do this. We're going to say price is bullish, and we're going to show it on the bear side and consolidation as well too. Price is bullish. I'll make sure it's not clean either, because I know that people hate when it's just clean, because it's not even like that for real. Boom. All right, so let's focus on how price is bullish. Before we even realized that when price is bullish, price was buying from somewhere. So that means that that level of support, clearly, yes, that price was buying from level of support. But always take consideration that when price is buying from level of support, a correction will need to happen. So if that correction is happening, that means that when this high is being established, that means sellers at the same time are actually loading up this market, loading up this level. So take consideration that yes, a high is a good thing, but always know that a high is an immediate resistance level. So that's why I always say high, aka resistance level, waiting for it to turn to support, because support and resistance levels can always change, meaning supports can be resistance and resistance can mean support. And what do I mean by that? When price came down to establish a level of support, yes, you can say, all right, why wouldn't I have bought from this level of support? In reality, you didn't even know, you wouldn't have known it was a support, simply because if I was to show you guys USD CAD once again over here, notice how when price made this low, then this lower high, you would have easily guessed, all right, this is the higher low, let me hop in buys, and then you would have been waiting, and then you could have potentially got stop loss hit, especially too when it comes for sells. Let's say price was making that lower high and you was guessing that, all right, sells is going to be going, let me hop in this level of resistance. You would have had to wait a little bit longer, and a lot of traders don't like to wait. They don't have the best patience. So it just goes to show like that waiting for that breakout and understanding is a lot cleaner and clearer. And now back to the zone, you can clearly see that when price made that higher low, I would have potentially played this breakout, because this breakout is giving me indication that all the sellers that were sitting here to push price down, they're no longer here. So this is a good indication that buyers are now in control in the market to now turn this into support. So what do I mean by this again? Because now this is giving me clear indication on two setups, not one, two. First setup could be the breakout. I can catch the breakout when I see price breaking above this high and staying above off of structure and what's going on in the market, because there's always a bunch of scenarios, but a breakout is always a breakout. And two, I could wait for price to break out, establish its high, and do that same thing again that I was guessing here. And the only reason why I can say it's not a guessing momentum anymore, because let's say price was to sell all the way back down into here, but failing to break lows. If I see price buying back above this zone, I know we're going to be attacking this high. So that's why I like to understand that support and resistance areas can really be controlled, because support is where buyers are at, but sellers are trying to break. So if sellers are trying to break it, they're now trying to turn it into a resistance area. So that's a key thing to understand, that if buyers are at there, it's not always the best thing to buy, because sometimes a breakout could be going with the trend, and now you're going to be catching that zone off of just clear support, knowing that buyers aren't there no more. That's a great entry to hop into. You know what I'm saying? So you could watch it, you could rewind it again, because I'm telling you, a lot of people don't look at support and resistance like that. They just look at resistance, I sell, support, I buy. Instead, you should be looking at it, especially with the trend, because once again, I'll show you another example. Let's say this one right here, this is a perfect one. I can put the resistance right here. Then I can put support right here. And this is why I showed this one, because this is a good example. This is when people really use it. Take consideration that boom, price made that resistance, and then price started to make that level of support. When price made that level of support, then made this lower high. Well, yes, it could make this lower high because price failed to buy up. I could have been like, okay, price isn't looking like it wants to buy. But then price made this lower high. Price making this lower high above this level of support, that is when people should be capitalizing off of, okay, not only price made this level of support once, it's in it twice. So now I can actually take this trade and put a stop loss under, because price doesn't even want to come under here. That's when people really would capitalize off of catching the lower highs and catching it really at the bottom, because you can see clear confluences. You're not guessing the lower high anymore. But now when you're waiting, once again, you can see that price came up, failing to break again. And now you get another lower high. Only reason why I'm saying this is because these are more levels of support trying to break one level of resistance. This is trying to give you an indication that what is this level of resistance here for? It's here for sellers to keep forcing price down. Once price breaks above, what happened to the sellers? The sellers are gone. So this actually becomes a great entry once you put your stop loss under, because you don't want to see price come under here again. And of course, if price is bullish, it doesn't want to be down there at all anyways. So that's why I say you want to take consideration that support and resistance can really be used the right way if you look at it with the trend and realize that if price is breaking these levels or not breaking these levels, you can capitalize off of using that, because now it's clear structure and clear confluence instead of just guessing something when you see it with a candlestick. And with that being said, let's get to number 3. So number 3, the market does not want you to understand what is going on through day-to-day reactions. And what do I mean by that? If we were to go on TradingView, and this is one thing that I've picked up just because I have this session on so many times. I'm gonna try and see if I see it on, no, I'm gonna just try it on gold just cause. So now let's get back on the charts. Boom. All right, so one thing the markets does not like to show you, the markets do not like to show you data, like what's going on day to day, because if they show you clear indication of what's going on day to day, you can start capitalizing off of the charts more. And let me see, I'm gonna get a new gold chart just so it's empty, so I could get a better showing of what I'm talking about. Boom, yeah, perfect. The charts are still, the sessions are still here. So one thing I always realized, that if you think about it, let me look for the right line. If you think about it, the start of the day is really the end of New York session, if I could say it the right way. So the end of New York session, when Asian session's opening, when Asian session's opening, that is actually the start of the day for the market, if you look at it like that. So I can try and make it a little bit cleaner, but it won't let me. But I'm gonna try and put it I was trying to put at the end of that session, and then the end of the day for the market would be at the end, once again, of New York session, because this is giving you clear indication of what's happening in the day. And the only reason why I say this is beneficial is because let's say I was to draw zones around this and capitalize, and this is a perfect example right here too. So let's say I could see that price made this lower high right here, right? Price has this low right here, right? And then boom, price made lows under here too. I could tell myself, when price started the day, I can clearly see that when price started the day, not only we're above levels of lows, we're trying to break this level of resistance. Price broke this level of resistance. I could have played buys just simply because I can see that the day wants to be above here. Price is not showing at all that selling momentum is down here. If I was to match up the days one more time, just so you could see more confluence of what I'm talking about. Start of the day is here, remember? So start of the day is here. Notice how yesterday price actually ended up selling off, failing to break a low, and coming to break this high. Price hasn't broke this high because it actually closed off that day. So take consideration that new day is trying to break above and establish level of support. This is why you could have played buys and support and your stop loss under the zone. Over here, you could have played sells, stop loss under the zone. Stop loss obviously above here. Price would have got hit, and that's just the only reason why I'm showing you that, because with day to day, you can clearly see how to capitalize off of more setups even more. Now, if I was to move this over here, let's put that here, delete this one. You can take consideration that, boom, let's say I was to hop in this trade, I had stop loss under, price never came to my stop loss, and I'm still holding, waiting for price to continue to come hit this high. That new day comes, not only price is trying to establish a level of support above this high, I can clearly see that throughout the rest of the day, price is completely bullish, and we came to hit this level of resistance. This is a great indication right here, because you can clearly see that when price opens, we're going to be opening at this level of resistance. And now when the new day comes, boom, if I was to move this over, I don't think the session is completely through yet, so I'm not gonna like guess what's going on. But now when the new session opens up, not only I can mark up this key level, I can tell myself, if price is going to be bullish through the day, it's going to continue to be bullish. It's going to show it on the lower time frames and on the higher time frames. If price isn't, you can clearly see what happened. Price is going to make highs and start selling off. That's what it does. Price is going to fail to make new highs, continue above, and then just start selling off. If I was to go on the higher time frames, I think the daily is the best for me. Yeah, the daily, perfect. The daily, you can clearly see that if I was to extend the zone, boom, just off of understanding what's going on day to day. And the reason why I say that this really matters is because with your sessions, you can really see what's going on day to day and capitalize with the trend, capitalize off of counter trend, see if the volume is in the market, if it's going to be in the market, because you can see that, for example, when I was showing you, I think I was on the 4-hour, perfect. When I was showing you here, price would have came in this trade, you would have seen that when price was here, the volume was here yesterday. So obviously, to see that the volume not be there the next day, I don't have to be too mad. I can be like, I can understand that there was volume here and we're still trying to break above and establish level support. Once price did that, you can clearly see that it did take about let me fix that, yes, because this was the day. You can clearly see that when the new day started, it literally just took a good day for price to establish level support and volume to come back in the market. So that's why I say it's good to really start identifying what's happening day to day instead of just looking at the charts as a whole, because sometimes you'll get really lost in all the candlesticks and thinking everything's a key area. But if you look at the day-to-days, you'll see what price is looking for, and then you'll start to capitalize off of a lot of more entries, a lot of more trades, and just to be able to become a better trader at the end of the day. And that being said, that is number 3. Number 4. Number 4. I'm telling you right now, I'm gonna say number 4, and a couple people gonna click off. Y'all gonna click off. This is stuff that y'all don't like. Do understand? Number 4 and number 5 is gonna be stuff you don't like. So if you don't want to be a real trader, you don't want to be successful, you can click off the video right now. These are for the people who really want to be successful. All right. Chill on me. So number 4. Number 4 is all about risk management. When you understand and learn how to capitalize and learn risk management and how many trading days you actually have in the market, you're going to be able to become a way better trader. And I'm going to show you what I mean by that with the charts. So boom, let's get to the charts. With gold right here, boom, I can clearly show you with gold right here. With gold, with risk management, not only I could capitalize off of having stop losses here, here, here. The one thing that matters is the equation of learning how to find my lot size. And the equation of learning how to find my lot size is my account balance times the percent you want to risk equals what you want to risk, clearly, and then you divide that by your stop loss and you get your answer. So if I was to do an example, we could do the text again. Do a text. If I was to do $10,000 account, risking 5%, that's $500. That equals to $500. And let's say I'm risking, we could say 50 pips. I'm risking about 50 pips. If you used to do the math on that, I'm pretty sure that's just 10 lots, if I'm not mistaken. Yeah, that's just 10 lots. So if I was to do a 10 lot, right? Let's say I was to do a 10 lot, right? 10 lot with this entry, 10 lot, and I'm trying to risk 50 pips. So 94.75, 50 pips is gonna be around like 389-ish. 389, like 389.7. So you're gonna do like 389.7. And you can see that, right? You can see it. You can see I'm damn near close enough. Once I was to do that, I could realize that my 10 is gonna be my lot size. I can capitalize off of it, and obviously once you get the 10, you're gonna get the decimal, so you can move it over, and then you're gonna realize that that's a 1 standard, because a 1 standard is $10 per pip. I forgot to break that down. I'm just so locked in with the lot sizes. But once you get the 10 on the calculator, you're gonna realize that you're gonna move the decimal over, depending on what the number is, and then you're gonna get your lot size. And it's good to just practice off of a bunch of numbers, work your way down first. The smaller the numbers, the better you're gonna start understanding lot sizes, and then when you go higher, it's gonna get a lot easier for you. So yes, you want to understand risk management, because now that you understand how to find your lot size in many trades, you can now learn how to break out your break down your trade. And what I mean by that is by scaling in. So for example, let's say you used to put a heavy position, but you could have put a tighter stop loss, or you could have put a heavy position But since it was since you're scaling in, it's not as heavy. It's gonna, let's say you're really trying to put a 0.5 in the market, but the first entry is gonna be like a 0.3. So from that 0.3, if price is gonna continue to break, you can then add a 0.2. And then from price continuing to break, never coming back to your stop loss, then you can continue to add 0.1s, and put those stop losses towards the entries, because those first entries is what you're essentially risking. You're not risking your account anymore, because now you're just trading off that profit to keep capitalizing. So that's why I say risk management is really good, because the more you break down risk management, the more you'll realize that it's up to you to wait. There's 30 days in the month, but there's really only 20 days to trade. 5 days each week. You don't get to trade on Saturday and Sunday unless you're addicted to Bitcoin and other things to trade, like I said. So you really got 20 days to trade. So if you can break down 5 to 10%, think about 5 to 10%. 5 to 10%, that's 20 to 10 trades, 20 to 10 losses. You're not going to lose 20 to 10 times if you are trading correctly, having preparation, and not trying to over leverage and trying to trade 5 times in a day because you're trying to chase your losses. You have to really break down that risk management and preparation. It's going to be there for you, because now it's all about that psychology, and it's up to you to really capitalize off of all the knowledge that you got, and you can soak it in. And now with number 5 is going to be quick, because it's really just about psychology. With me, psychology is a big thing, and I don't like to stress the word psychology. One thing I like to stress is mental awareness, because not everybody's psychology is the same thing. So with mental awareness, I feel like the markets don't want you to understand that you need to be mentally aware what's going on in the markets. You don't have to be a robot. You can be aware of your emotions, but the more you're aware of your emotions, the more you have control, the more you can gain control and discipline. Because you're not aware of your emotions and you want to just think irrationally, it causes you to think that psychology isn't real. But if you are aware of your emotions and you notice that, hey, when this happens, I get like this, I wonder why. Maybe let's wait 5 or 10 minutes. If I still feel like this and I don't like what I'm seeing in the markets, get out. That's what mental awareness is, because not only that's going to teach your psychology if you're right, if you're wrong, to feel like that and move like that. You're not going to just move irrationally. So now when things happen, you're going to be like, I know why I moved like that. I know why I felt like that, and I did this. Was it right? Was it wrong? Who knows? It's all depending on the scenario. But mental awareness gives you that preparation with psychology. A lot of people don't like to tell you about psychology. They just say you need psychology, be a robot. They don't even want to set you up the pathway for fucking psychology. And that's what I love so much about. I love that I can teach you that number 5 about the markets. What they don't want to tell you is that mental awareness is what's going to get you fucking far in the markets. If you understand that you know what's going on in the markets and you know how you feel during each trade, during what's going on in the candlesticks, during setups, you're going to become way better as a trader, because you're going to know more about yourself day in and day out. Yes, a lot of people say that trading is going to expose you as a person, but mental awareness is going to show you who you want to be and where you can be and how you can do it. So with that being said, this is the end of the video. I hope you guys really got some notes. You guys took some good sauce in. If you guys have any questions, please hit me up. Be great. The only way is up. And I'm going to see y'all later. Peace. I'm lost.
Shout out to that boy, sir. He probably, you know what I'm saying?
Go down there, hit that subscribe, hit that like, see that comment, get to the keyboard, get to your phone, and get to tapping. Be great the only way's up. Let's get it.
I wouldn't even say these niggas chain. I would just say these niggas weren't real if they would've had a nigga think. One day I'ma run away with my gut feeling, then take it to the bank. One day I'ma run away with my dream, bitch, then take it to the paint. Life ain't getting no more easy, I'm just trying to get away. Nigga asked why we were robbing, we were just trying to make a way. Main whole nag, my phone ringing, I'm just trying to make a play. I seen everybody eating shit, I was just trying to get a plate. Before I leave, I say a prayer and then pick up the Glock. Folks stick invest your stock. Police trying to grab the block. Before I slide, I say another prayer and then go load the ball. Then I go unload the block. It feel good, unload the shot. I cut my hoes off, cause them bitches scratch me out. They take my phone like scratch me out. When shit got cold, I kept it hot. Ain't no switching up forever in that mode, ain't getting out. I can't let no nigga outdo me forever, live by get it now. Do what she do, she gotta go. Baby, known for getting round. All these pretty hoes like to come around, cause they know we getting down. Couple niggas though too deep, couldn't swim it, now they getting drowned. Work too hard to get up to the top, now ain't no sitting down. I wouldn't even say these niggas change, I would just say these niggas weren't realist, they would've had a nigga think. One day I'ma run away with my gut feeling, then take it to the bank. One day I'ma run away with my dream bitch, then take her to the paint.